If you're trading options on a relatively small account, you've probably found yourself at times just wishing that you could buy LEAPS on something like QQQ, but your account can't handle it because of the $10,000 plus investment. I want to show you today how I get LEAPS on the Qs for as little as $2,600. Of course, this isn't financial advice. This is just what I do. Don't blindly copy us strangers on the internet. Do your own research and make your own decisions. So today what I want to cover with you is number one, when I like to enter LEAPS trades, how to trade LEAPS on something like QQQ for as little as a quarter of the upfront capital, how to choose things like delta, days to expiry, strike, etc. And then I'm going to share with you the exact trade that I entered that profited $555 off of just a $2,600 investment and in only 2 days. This is a trade that we took inside the 50K Club, which is my community for options traders to create a consistent monthly income without needing a seven-figure account. We look at strategies that are specifically for smaller accounts. I share with you all of the trades I take inside my 50K account, and this was one of them. So the link for the 50K Club is in the description if you would like to come and join us. So let's get started. First I want to cover is when to enter a LEAPS trade. LEAPS are directional, right? It's not like selling a put where we've got room to be wrong. We don't have to be right. We just have to be not a lot wrong. Whereas to win when we're purchasing options, we've got to be right or we lose. So the right entry matters. Let me take you inside the QQQ chart. I want to show you one of my favorite entries and the entry that triggered me to get into this particular trade. So here we are inside the chart for QQQ, and I actually want to take you back to the day that I entered, which is right here, the 3rd of August. Let me literally cut off everything else. Okay, and here we are. We are right here on August the 3rd. This is the day I entered. I didn't time my entry necessarily off of the daily chart though. What I was looking at was if we changed to a weekly chart, the turn of the stochastic RSI on weekly chart. I was looking at this chart. We'd had a nice bounce off of these bottom levels. We'd started to turn here. For me, that lets me know that the most likely next move is probably up a little bit. You can see that we've done it multiple times. We start to turn on the stochastic after a decent dip, straight back up. Down here even, we got a little bit more up before our down. So this is, for me at least, one of my most favorite timings for when we enter a LEAPS position. Now, it's not QQQ that I entered because on a $50,000 account, I don't want $10,000 of it tied up in LEAPS as a directional trade that doesn't pay me income along the way. You can talk about poor man's covered calls all you like. I do not like them. That's not my goal when I'm buying LEAPS. I just want that directional move. So instead, I traded QQQM for as little as right now it's trading at, well, at the time of entry, it was trading at $288 rather than 700 odd. So the first thing to do is not to look at, oh, I want to go and buy a 365 DTE or I want to go and buy a 0.7 delta or anything like that. The part that I find gets missed more often than not is making the decision on where you expect the stock to go, right? Just because we think it's a good entry, we need a target. So my target was 300, all the way up here. So I was looking at, right, I think we come back to where we had this support and resistance area before. I think we potentially come back and retest it. So my plan was, when we get close to this $300 mark, If we don't quite make it, if we actually start to see some rejection a little lower at around the 297, 298 mark, we don't quite get to 300, then I'm going to take my profit and I'm going to say thank you very much. Let's play it out. What happened? Let's play day by day. Next day, straight up to 298. The day after, we got as high as, what was the high for that day? Let me remove that. The high for that day, 299.95. We all but hit my target of 300 in just 2 days. So now that I'd found that entry, let me show you how I decided which call to buy. So the first thing, let's come and have a look at the options chain. I've got here just on bar chart, QQQM. Now, I didn't technically go for a LEAPS. I bought the June 2027. So I technically had an almost LEAPS. I got 306 days to expiry. Why didn't I go further out? Because I didn't need it, right? I think that as traders, as options sellers in particular, we get hung up on time. If this trade is going wrong, the extra 60 days isn't necessarily going to make any difference to me. If anything, it might end up costing me more money because, of course, the contract's more expensive. But when I'm looking at this move, I expect it to happen sooner rather than later. If it takes us more than 1 month, more than 2 months to get up here, my trade's gone bad, right? So I don't need that extra time anyway. So hence I just went for the June of 2027. Now, when we're trading something like QQQM that doesn't have as much volume and open interest, I'm not looking at the delta. I'm looking at instead where the open interest is. So I'd actually bought the 300, but of course, remember at the time I bought it, it was actually out of the money. It was sitting at around about this level here. And that's the one that I bought because it had the most open interest. That's all I cared about. I didn't care about the delta. Why? Because at the time, the 0.7 delta only had a handful of open interest, which means it's harder for me to get in and out of it. I'm likely going to be paying as high as possible for it, and I'm likely going to be receiving when I sell it lower than what I could if there was more volume, more buying, more selling, right? So that's what I look for when I'm selling something or buying something that's less liquid than, for example, QQQ. So not interested in delta, looking at the open interest instead. And that also tells us that a lot of money, comparatively, is expecting that we get to the $300 mark. So when you're looking at out of the money contracts, the more contracts that are sort of around one particular dollar or strike, it tells you that that's where the bet is. So that's what I selected. Now, why else did I select it? Because of, let's come to option strat and let's build it out, because of my acceptable loss. This is something that I think a lot of people don't consider, is how much you actually prepared to lose, right? Especially in a smaller account. A lot of people say, if this gets to a 50% loss, cut your losses, right? But that's going to be a $1,500 odd loss. Are you actually willing and able to take a $1,500 loss? And also, where on the stock and on the timeline of owning it could you hit that $1,500 loss? Here's what I mean by that. So on this particular contract, June 17, 300, if I was prepared to accept a $1,500 loss, I would be there in early September if we dropped down to 274. Come back to the chart. Where's 274? That's down here at our moving average. If I think we might get to this and it would stop me out, but I think the trade's still good, I don't technically want my stop loss there. I want to more breathing room. So I might be looking at this chart going, you know what, if we close below this particular low, that's actually my sign to get out. That might be my plan. If that happens, what does your loss actually look like, right? Because you don't want to be stopped out sooner. So if you need more room, if you need your loss, your $1,500 limit to be lower than this 274, then you might need to go out of the money a little, right? So if we go out of the money a little, if we go up to 315, it's going to cost us less. It's going to cost us 2,400. But on that same date, our $1,500 loss comes in thereabouts at 268, right? Which would be close enough to where I've got my marker here. So this is the part that I think people don't pay enough attention to, is when and where will your loss happen? We've got to plan for the loss. So once we've planned for the loss, we can then look at the upside. Okay, so I'm expecting a move to $300. Of course, that's already happened. So let's say I'm planning for a move to 315. So if we get to 315, what does my profit look like if I want to accept the 315 contract? Okay, this is what my profit looks like. What if I go for the 300? Of course, I'm going to get more profit, but it comes with a greater loss. If I went for a 0.7 delta, that's probably around the 280 mark at the moment. Yes, it's going to cost me more to get into the trade. Yes, I'm going to make more, but either I'm going to lose more, or if I'm still only prepared to accept, say, a $1,500 loss, I'm going to realize that loss earlier in the chart, right? So now $1,500 loss is up at 281, which is all the way up here. So I hope this is helping you to kind of think through what the contracts actually mean to you as far as how much you might lose, how much you might win, because this is the important part, right? So play around in option strat. Look at the different scenarios. Then you might choose to look at the different dates, right? Let's have a look. If I bring it in sooner, the contract will cost me less. My loss, look at my loss. I lose less as well. 281 is a $1,200 loss at the start of September. 281 is only an $1,100 loss at the start of September, right? And it's still giving me, say for example, this is the January contract. This might be what I can afford on my account. So we don't have to forego the trade. This is the final part that I want to end this on. We don't have to forego the trade, because when we look at a LEAPS, which would technically be September 17, if we can't afford $3,800 for an at-the-money call, actually, let's go to 0.7 delta, which is, like we said, probably around 280. If we can afford $5,000 for a LEAPS at a 0.7 delta, and if we can't afford a $1,500 loss or a $2,500 loss, we place the trade we can afford. It might be that we come up to January. It might be that we come to at the money. It might be that we go to out the money a little bit. But as long as this profit and loss is acceptable for you and your account, you're in a good position. It's when the profit and loss isn't acceptable for your account, or if the loss is not at a level that makes sense where you would cut the trade, that it doesn't make sense. So that is the trade that we took. I ended up exiting it here on the 5th of August. I was in it for literally 2 days. It hit my target far faster than I anticipated. And yes, if we play it out, we are a little higher, so I probably could have gotten a few extra dollars out of that trade so far, or I could have held it for even longer. But my goal, remember, was we get to 300. We got to 300. So now what am I waiting for? The next pullback. If we come back and test these moving averages, then I'm cashed up, I've banked my profit, and I'm prepared to go again. So I hope that was helpful in regards to leaps and how to plan it rather than just having a blanket rule of this many DTE and this is when I will accept my loss at X amount of dollars loss. Plan it a little bit. Look at the chart, look into options strat and see what actually works for your account. All right, I hope that was helpful. If you like the idea of this trade and you want to potentially see me take more trades like this and alert you to them, come into the 50K Club. The link is in the description. I would love to see you in there.